Ladies and gentlemen, welcome to Only Trade to Win. I do not know which way the market is going today or tomorrow, and I do not have any buy or sell recommendations for you. But what I do have is a methodology that took 25 years to put together, and the intent of this show is to share with you how a professional trader and investor thinks so you can implement it and become successful and profitable on your own. Today is February 15th. It is 4:45 a.m. New York time. This is a picture of a company called ARM Holdings PLC, ticker symbol ARM, very new listing. It went public in September of 2023 and just released its second earnings last week, beating both on the earnings and revenue side. And look what happens to the stock. It gaps up and closes 45% day one. Then it does nothing for the next day, but on the third day, it goes up another 30%. This company is making chips for the artificial intelligence industry, and I think it's one of the companies that we're going to put on our watch list and see what it does next year. Right now we're exactly at the middle of the month and we are in extremely fast moving markets. So what's important to do is to constantly update our watch list and know where the strength and the weakness is. So my first stop is to get the numbers for where the stock prices are right now and figure out the change for the year to get an idea on what's going on. Now, once we're done with putting down these numbers, we can go back and look at what we saw at the beginning of the year, and now go back and see Nvidia continues to lead. Meta is the second one, and here we have a change for the third place. Microsoft is no longer in third place because Amazon.com overtakes it. Okay, and Tesla is down 24%. And of course, I'm going to go and update our indexes. Last update we did was February 5th. So I'm just really quickly going to change these numbers and come back to you. Okay, and now we have a very clear picture of what's going on with our indexes. Nasdaq leading with 7.6% for the year, almost 5.5% for the S&P, 2% for the Dow. Russell is positive for the year, so let's make it green. Okay, everybody's in the green. And one of the things that we want to do every time we're doing a review or something else, we want to do the same thing over and over. We want to have a way of approaching market, which is a very unpredictable thing, in some kind of structured way. So when the market does what it does and it matches what we are expecting it to do, guessing, whatever you name it, we would be on the right side of the trade. And if we look at the mega trend, this is a monthly picture going all the way back to 2008 for the Dow Jones Industrial. And if we look at this picture, I hope you can clearly see that the mega trend is up and we're looking back at 2008. And if it's difficult to see, just look at the orange line that I drew and you can see that the line is going straight up. And that's exactly what happened to this market. From 2009 until now, it is up 420%. Here is the picture for the S&P 500, pretty much the same thing. A clear upward trend from 2008, making all-time highs. Had 3 sell-offs. Here is the financial crisis. Here is the pandemic. Here is Russia starting war and invading Ukraine. High interest rates, high inflation, worries. It all proves to be wrong. And the market takes off and we are making new highs almost every day. The whole rally is led by the Nasdaq 100 index. Our strongest company was Microsoft, that started making its all-time highs before any other company. Then Nvidia took the spotlight and held it pretty much since it broke above the $500 mark at the beginning of this year. Now, since we know what's going on with our indexes and we also know what's going on with our stocks, we can go and look at the pictures. Since we're going up, let's just start with the strongest one, Nvidia. We've done extensive coverage of this stock, and one of the things that I just wanted to quickly point out is that Nvidia gave us plenty of chances to get in right in this area between 400 and 500. The first time it entered the 400 area was right here in May of 2023. Then in August of 2023, it touched the 500 mark. Now remember, this is the all-time high area for the stock, which means that it never traded here. And all the positions that are being established here, it's either people who are long getting out, people who got short here and they're trying to cover, plus people who are entering new positions. Some are betting that the stock will go down, maybe close this gap, and of course some are getting long. Now for us, the 400 area was a great entry, was because if we put in the low here, we can see that the absolutely low for Nvidia after it gapped up was about $370. And in this case, we're looking for $30. We go above, we touch this area once, bounce. We touch it second time, we make an all-time high, and we trade to this $500 area. Then we come down again. The stock rejects that area. Then we come down again and we wick into this area. We actually trade below 400, and look what happens. The stock rejects it and runs and makes a new high, takes a little breather, breaks out. Well, now if I know that 365 is my stop, and I also know that price has been up to 500 twice, my assumption would be that after testing and rejecting this area, the minimum that it should do is go back up and test this area. But in reality, I knew that Nvidia was the hottest stock on the market because it had the best earnings and revenues increased. And we saw it over and over, no matter what stocks we compared it to. If we compared it to semiconductors, or we compare it to other stocks on our watch list, which are pretty much on everybody else's watch list too. It was the strongest stock. It had the biggest run going into the new year. It consolidated and gave us 4 months to get in and actually take advantage of this trade. And everybody who's in it, enjoy it. We never know how far it's going to go. And the only thing here is that you cannot buy it. If you don't have Nvidia, you cannot buy it absolutely under no circumstances, unless you say, look, I'm buying it, I'm not going to look at it for the next 50 years. And the reason for that we know that this stock has tendency to make a new high and sell off. Here, when we came to this 480 area, here is our 16% sell off. Here's from 522, and we had a little one, about 10% at the end of the year. But again, if we're looking at 21%, now when we're looking at $740 stock, a 20% pullback is 150 points. And in our case, it would look something like this. So we're looking for a pullback of 150 points. It would be $560 a share. I am not saying that it's going there. What I'm saying is that it has done this before, and if for whatever reason you're buying it here right now, which I think is a really bad idea, but I'm not giving any recommendations here. But what we know is that this stock pulls back every time it makes a new high. Now, this train has left the station, it ran away. One of the biggest rules in investing and trading is that you do not want to chase a price. If it runs away from you, you let it go. It's like waiting for a subway. You know, if a subway is gone, I don't see many people jumping in the tunnel and running after the train. Mostly everybody's waiting for the next one to show up. And for some reason, people don't think about investing their money like that. But think about this like a subway train. This one is gone and the next one is coming in some period in the future. It could be, you know, an $1,000 stock, $2,000 stock. At that point, it will pull back and give us a good entry. But that is not right now. Right now is for people who are in it to enjoy. Right now is for people who are doing this work and looking at this structure and actually waiting for 140 days and saying, when is this thing going to go? I am ready. Just do what you have to do and let's go. And I understand in our day and age, waiting 140 days is like waiting forever, and also listening to a show that is 20 minutes talking about some picture is a long thing. But that's the reality. You know, that's the name of this game. You got to look at a lot of pictures. You got to look at a lot of numbers. You got to study a lot of earnings. You got to compare it to a lot of different other things. And if you're lucky enough, you end up on the right side more often than you are on the wrong side. And hopefully you end up making more than losing. And that's all. If you stay long enough in this game, I think anyone who has patience and anyone who has discipline of saying, I'm going to take only trades that match my criteria, and I'm going to adhere to all my stops and take all my profits when my profit target is reached, you win. Anyways, our next stop is Meta. Meta is my favorite stock for 2023, and I think it's becoming my all-time favorite. And if this is your first time here we go. Meta, 2022, the stock sells off more than 75%. All the investment fund managers are worried about Mark Zuckerberg taking too much time and spending too much money on its metaverse. So what they do is they come out and they dump the stock. They sell it for the whole year. They sell it from $383 a share all the way to below 95. So 383 to 95. Losing 75% of its value. And then 2023 comes around and Meta says, screw all of you, and it goes up almost 300%. If you look at this picture, it really did not have any negative months. If you look at this, it just inside of the range that was set here, wick down, and off we go into new highs. And once we made new highs, as we mentioned before, there are some stocks that take off like rockets and there are some stocks that take some time. Last year, it was Microsoft that took off first, and it pulled the whole Dow Jones Industrial with it and had the rest follow. Here is Nasdaq 100 after making its all-time high. It is still running. Look at this. This is a monthly picture. We're still running. Just from the point where we made an all-time high right here, we are up almost 10%. And if we extend it to the beginning of the rally in November, we are up almost 25%, and we have no pullbacks, zero pullbacks in 1, 2, 3, 4 months. This market is incredibly strong, and it makes absolutely no sense to be in any other stocks than the leader, which brings us to our third place, Amazon, because it was the previous lower low. Trading and staying about it was very critical for the price structure, and the stock did exactly what we thought it would do. And in our case, we just were on the right side of the trade, and coming into this congestion area, if you look at it, this goes back really long time. And it's important because if you go to July of 2020, that's 4 years that people made some kind of assumptions and they took positions. And in this case, you say anyone who took short position here, they did really well because the stock price dropped more than 50% from there. And again, we are coming into the same area, but we're pushing it to it really strongly. You see, this bar is a really big bar, and we're just in the middle of the month. The size of this bar is a lot bigger. Well, maybe it comes close to this one right here when it rejected it at the bottom. What it tells you is that the buyers are becoming more aggressive or sellers are becoming less aggressive, and they're just lifting offers and running away trying to get a better price. So looking at how strongly Amazon is pushing into this huge resistance area that is going back 4 years, it shows how much strength there is in this market. And then one of the things that you don't want to do is you really don't want to try to pick a top and get short and come out a hero. It is scary to do so, but in a strong bull market like this, you just gotta buy pullbacks. And in case when there is such strength in the market, you may have to go to an hourly time frame, because on a smaller time frame, you may be able to find some kind of pullback that you will not see on a longer term frame, like in our case right now is on monthly. Just quick look at the Microsoft. It's just sitting above $400, near its all-time highs. Pretty much in alignment with the rest of the market that is strong and is making or near its all-time highs. Now, last stop is our big loser for the year so far, down 24%. Tesla. We just did a long show on it. Last video is actually all about Tesla. If you'd like to see it in detail, please do so. November 2021, the stock makes its all-time high over 400, sells off down almost to $100 per share. Then it has a nice rally last year, touching the 300 mark, and right now we are at 188. Now, the interesting thing that we noticed about Tesla was that this high was established in July, when all other companies, they were making their all-time highs, new highs. Tesla stopped making its highs since July. Then we have a lower high in September, and we come to the end of the year, we have another lower high. The stock is in a really critical area, because if you cannot hold this area, the next stop to test this 160 area, and if it breaks, it will go and try to test these lows, which is kind of seems really insane if you consider that the company is doing so much better in terms of finances than it was doing before. But in any case, and when it comes to strength, we want to be in the stocks, that are like Amazon.com, up 127% since last year, looking to test its all-time highs just a few points away. Or comeback champion of last year that we've been talking about almost every show is up more than 300%. And take Microsoft, the stock that was the leader. That one is alone up 84% since last year. Unbelievably amazing market, considering that we had such bad news. So I hope that by going through all these different tables and putting different ideas together, it kind of gives you an idea on what kind of structures you can build in this unstructured environment. And one of the things that we need to do is when strong stocks like Apple start pulling back, we have to be really cautious and pay attention and see when the end of this pullback is, so we can get in at a good price. Even after the stock runs up 300%, gaps up almost 100 points like Meta did, and it consolidates. If it consolidates and it goes up, it means that there are more buyers than sellers, and buyers are aggressive and they want to push the stock higher. You should never be intimidated by buying the stock that has consolidated, but you can never get excited and start chasing something that is up 400% and is just going in straight line for almost 300 points or 50% of its value. Because where would you put a stop for this pullback? Yes, we said 20%. That's $560 a share. Or are you going to put it below this structure? In any case, Nvidia will give us not one, not two, but many cases in the future to get in. At this point in time, you know what's going on in the market, and it's time for you to build your own trading plan and trading strategy and see when the market matches your strategy, then you get in. And if you are in the green, that means that everything is aligned and you stay, and that's how you learn. You make mistakes, you write them down, try not to repeat them, but hopefully this helps. Until I see you next time, navigate with care and have a great day. Bye everybody.